we're doing a whole load of exciting things. These are very exciting times. I think first and foremost the work that we're doing in India, where we're working with a variety of government ministries, right up to the Prime Minister's office and the Planning Commission, to help digitize all the G2P payments. As you probably know, about $35 billion are transferred by the Indian government to its citizens each and every year. And the objective is to digitize almost all of those. How are they going to do it? Well, it's basis the Aadhaar biometric identity program, which is then linked to the 270 million bank accounts that they opened for the previously unbanked about a year ago. So now we have the banking infrastructure and the biometric identity to weed out ghost clients and duplicates and really push the G2P payments into the end beneficiaries' accounts. So that's really exciting. It's saving the government of India a lot of money, but perhaps even more importantly, it is reducing the level of leakage that happens between when the government sends the full amount out and when the beneficiary receives it. When under the previous cash-based system, there was a lot of money that was lost in transit. So I find that really exciting. We're also working with some of the new payments banks and small finance banks to get their systems up and running, to help them develop products to deliver over the new digital infrastructure. Because ultimately what we're all working towards is a full digital ecosystem serviced by 200,000 agents, providing cash in, cash out, and then leveraging the unified payments interface, which will create a digital footprint for each and every Indian citizen. This will allow us to what Nandan Nilekani calls democratize credit. So right now, if I'm a poor Indian and I need a loan, I have to go to different banks and ask for that loan. In the future, and let's be clear, this is still very much work in progress, but in the future we believe and hope that as an Indian citizen I will be able to open up my digital locker to a variety of banks saying, I need 10,000 rupees repayable in a year, what rates of interest and what package can you offer me? So we invert the relationship and make the banks bid for the customers instead of the customers being supplicant to the banks. So this is really exciting. It's exciting because we're revolutionizing the way that a digital ecosystem can help create financial inclusion. But it's also exciting because more and more countries are looking at India going, we can learn from this. And so we're receiving increasing number of calls from governments across the globe saying, can you help us understand what's going on in India and tailor it for our country? And again, we need to be clear, India is a special case. Not the whole of this ecosystem can be replicated straight into other countries. We need to be very careful, selective, and we need to tailor elements of that system to optimize it for use in other countries. So I think that's the first most exciting piece we're doing. We also continue to work on agent networks across the globe. We've completed surveys and technical assistance to a variety of providers in 11 different countries. And we've extended the Helix Training Institute's range of offerings from the core agent network accelerator training that has been so extraordinarily popular and powerful to also develop training workshops on risk and fraud in digital finance, marketing to drive uptake and usage of digital finance for MFIs, and also core principles of digital finance, which gives a basic introduction for those people who are new to the area and wanting to sort of cut through the jargon and really understand the core issues that will make or break a successful deployment. So we've developed those, and now we're in the process of translating them into French and we will be offering them into Francophone Africa under a grant from the MasterCard Foundation, and we're very much looking forward to doing that as well. So I think there is a growing range of creative MFIs that are beginning to use fintech. I think it's useful to sort of think about it in 3 or 4 ways. So the first way that MFIs could potentially use fintech is to set up their own e-money system. So Tamir Bank and Equity Bank have done exactly that. And if you look at Equity Bank now, the vast majority of their transactions are conducted at agents. The vast majority of their loans, 85% of their loans, are pushed out automatically from the system and then cashed out through agents and repaid through agents. So there's a bank that is really leveraging fintech to its full potential. The next option is to use an MFI's outreach in order to create a cash-in, cash-out agent network. So we've seen this with World Vision in Cambodia, with Finca in DRC, and so on. It's expensive to do, but is an important and high potential role for MFIs in areas where there are inadequate agent networks to service cash-in, cash-out within that country. So then the third option is, of course, simply to ride the rails, to use the payment systems that a fintech or mobile money system provides in order to make the loan disbursements or loan repayments. And you've got a very large range of MFIs doing that, a lot of them using the Masoni system that allows them to have both the back end integrated with those payment systems. And we're working with several MFIs in Asia to do similar work. Most excitingly, perhaps Buro in Bangladesh, but there is a growing number of them that are going this route. The fourth one is to use the data capability to facilitate communication, loan decision making, and so on and so on. So we see a lot of Indian MFIs using this. There's an organization called Atu that provides an excellent tablet-based system for loan officers to screen SMEs and facilitate loan decision making. And of course, you've also got a growing number of cloud-based core banking systems that tailor to the needs of MFIs specifically. Oridian is an example of that. So I think there's a great range of fintech that is being adopted by MFIs that is useful. The fifth option that we always put on the table for MFIs is to wait and watch, because everything is moving so quickly. It's terribly difficult to figure out what to do, and we're not really sure which of these fintech companies will really survive and blossom into the future. But that period for being able to wait and watch is rapidly disappearing. Very soon, if MFIs don't develop a strategy and implement fintech behind that strategy, I think they will simply become irrelevant and slowly but surely shrink and die. If fintech offers opportunities to reduce cost structures, improve loan decision making, improve communication with clients, and so on, that MFIs really do need to leverage into the future. So let's unpack microcredit as an enterprise. I think we all knew years and years ago that a significant proportion of loans taken by poor people from microcredit organizations were used for consumption smoothing. And certainly some of the initial loan cycles, very often the loan size was so small that they couldn't be used for much else anyway. So the industry lived this lie for way too long that we are funding micro enterprise. As these RCT studies came through, to show us that the impact of microcredit was not as we had all hoped. I have to confess that we at MicroSave, and we are called MicroSave for a reason, we're not tremendously surprised. I come back to something that we've been saying for years. Poor people need a range of financial services. They need the same range of financial services that you and I do. And so we shouldn't be surprised that if we ask the poor to run the marathon out of poverty on just one leg, whether it's credit or whether now with mobile money increasingly it's just payments, they will not be able to do it. They need the full suite of savings, credit, payments, and insurance to manage their household finances. And the other point about that that's important, of course, is that they don't actually think about the management of their financials or their household budgets in terms of credit, savings, insurance, and so on, in the way that banks do. They have very different mental models for that. And this is one of the reasons that I'm excited about the advent of smartphones, because we can create interfaces that will be much more intuitive and much more reflective of the way that poor people think about and manage their money.